If you enjoy uncovering quality companies trading at unexpected discounts, Insightful Value is where you want to be. Today, we're diving into Meiji Holdings, a household name in Japan with a surprisingly low stock price. This review is for informational and educational purposes only. It's not financial advice. Don't forget to like the video and subscribe to the channel for more insights just like this. So, what's going on with Meiji Holdings? This is the company behind Meiji milk, yogurt, chocolate, baby formula, and even pharmaceuticals. Meiji isn't just one of Japan's most recognized food brands. It also has a thriving health science business, which includes vaccines, antibiotics, and nutritional supplements. Despite being in essential industries with strong consumer demand, the stock has been under pressure, and that's exactly why it's worth a look from a value investing perspective. In the latest fiscal year, Meiji posted solid revenues over 1.3 trillion yen, with its food segment contributing around 80% and the remaining coming from its pharmaceutical unit. Operating profit was slightly down year over year due to rising raw material and logistics costs, but margins remain healthy. Meiji still generates stable free cash flow and maintains a strong balance sheet with very manageable debt levels. On the dividend side, Meiji has been quietly increasing payouts over the years. It has a track record of growing or maintaining its dividend even during tougher market cycles. Right now, the yield isn't extremely high, but it's supported by earnings and covered comfortably by cash flow. That kind of consistency is what income-focused investors appreciate. So why is the stock price low? Partly it's the market sentiment. Japanese consumer goods companies haven't been in the spotlight recently. Investors are also concerned about cost pressures from commodities, as well as stagnant domestic growth, but those risks seem priced in. Meiji has been actively raising prices and streamlining operations, and it's also expanding its health science and overseas businesses, especially in Asia. There's also a strong brand moat here. Meiji is one of the most trusted names in Japanese households. In categories like milk, yogurt, and chocolate, it has leading market shares. This brand strength, combined with its innovation pipeline and diversified portfolio, makes it more resilient than it may appear at first glance. Of course, risks remain. Currency fluctuations could affect overseas earnings. Regulatory pressures on food and pharma pricing could also play a role, and any major shift in consumer trends would require Meiji to adapt quickly. But overall, the company has shown that it can navigate challenges with long-term discipline. From a valuation standpoint, Meiji is trading at levels that suggest the market is overlooking its strengths. Its price-to-earnings ratio is modest, and when you factor in its consistent profitability and brand power, it starts to look like a classic case of a solid business temporarily out of favor. At Insightful Value, we break down the fundamentals behind companies like Meiji Holdings. Our goal is to help investors spot value where others might not be looking. We cut through the noise and explain the story behind the numbers. If you want more insights like this, head over to insightfulvalue.com. And if you haven't already, make sure to subscribe to the channel and give this video a like. It really helps spread the word.